June 2010, Tesla goes public at $17 per share. Wall Street calls it a joke. A car company with zero profit, endless cash burn, and a product most people had never seen. Fast forward to today, Tesla is worth over $800 billion. If you invested $10,000 at IPO, you'd have over $2 million. This is the story of how a failing startup became the most controversial investment of the 21st century. Tesla wasn't founded by Elon Musk. That's the first misconception. It was started back in 2003 by Martin Eberhard and Mark Tarpenning, two engineers with a vision to prove electronic cars could be fast, desirable, and profitable. Musk came in 2004 as lead investor, contributing most of Series A funding. He took chairman role, then CEO by 2008 after internal conflict pushed out the founders. The early years were brutal. The first car, the Roadster, launched in 2008, right as the financial crisis hit. Production delays, quality issues, Tesla burned through cash faster than it could raise it. By 2009, the company was weeks from bankruptcy. GM and Chrysler were collapsing. Who wanted to bet on an electric car startup? The answer? Almost nobody. Investors saw Tesla as a luxury science project. The auto industry dismissed it entirely. Real car companies were betting on hybrids, not pure EVs. Dealerships laughed at the direct-to-consumer model. Analysts saw no path to profitability, but Musk made a critical bet. He positioned Tesla not as a car company, but as a tech company building cars. That narrative would change everything. 2010, the IPO gamble. Tesla goes public on NASDAQ. $226 million raised. The stock opens at 19, valuing the company at $1.7 billion. It had delivered fewer than 1,500 Roadsters. No mass market car, no manufacturing infrastructure, pure speculation. Wall Street was split. Bulls saw disruption, bears saw vaporware. 2012, Model S changes the game. The Model S launches. It's not just an electric car, it's a performance sedan that beats BMWs and Mercedes on acceleration, tech, and range. It wins Motor Trend Car of the Year. Suddenly, Tesla isn't a niche player, it's a legitimate threat. The stock triples in 2013, from $30 to $190. Momentum builds. 2013 to 2015, Supercharger Network and Gigafactory. Tesla announces the Supercharger Network, free fast charging across the US. Competitors have nothing close. Then comes the Gigafactory announcement, a $5 billion bet on battery production at scale. The message is clear. Tesla's playing long-term, but production hell begins. The Model X launches late with quality problems. Cash burn intensifies, short sellers pile in. This becomes the most shorted stock in America. 2017 to 2018, Model 3 and near-death experience. Model 3 was supposed to save Tesla, the affordable EV for the masses. Pre-orders flooded in, 400,000 in weeks, but Tesla couldn't manufacture them. Production hell became Musk's daily reality. He slept on the factory floor, automated assembly lines failed, workers hand-built cars in tents. The stock swung violently. Musk fought with the SEC over tweets. Funding secured at $420, that nearly got him removed as CEO. Tesla bonds traded like junk, bankruptcy rumors spread again. Then, in Q3 2018, Tesla hit profitability. Model 3 production ramped, the shorts got squeezed hard. 2019 to 2020, the exponential run. Tesla starts 2020 at $430 per share. Then, COVID hits. The stock crashes to $350, But something strange happens. While traditional automakers shut down, Tesla keeps building. Gigafactory Shanghai comes online. Model Y launches. Deliveries beat estimates every quarter. The stock explodes. $430 in January, $2,200 by August. A 5-for-1 stock split. Tesla joins the S&P 500 in December. It becomes the most valuable automaker on Earth, more than Toyota, Ford, and GM combined, despite selling a fraction of the cars. Why? Investors stopped seeing Tesla as a car company. They saw it as an energy company, a software company, an AI company. The narrative shifted to robo-taxis, solar, battery storage, full self-driving subscriptions. The PE ratio hit 1,000. Traditional valuation metrics broke. Either Tesla was the future or it was the biggest bubble in market history. Tesla stock has been a battlefield. From 2010 to 2020, it was the most volatile major stock in America. Short interest regularly exceeded 20% of float. Elon Musk's tweets moved the stock by billions in minutes. The rallies were explosive. 2013 plus 344%, 2017 plus 46%, 2020 plus 743%. But the crashes were just as violent. 2014, negative 15%, 2016, negative 11%. 2019 started with a negative 20% drawdown before rebounding. Retail investors loved it. Wall Street was divided. Jim Chanos and other prominent shorts called it a fraud. Cathie Wood's ARK Invest called it the future and bet millions. Tesla became a meme stock before meme stocks were even a thing. The thesis evolved constantly. Early investors bet on EVs. Later, investors bet on energy. Recent investors bet on autonomy and AI. Each wave brought new believers and new skeptics. The 2021 peak hit $1,200 per share. Market cap $1.2 trillion. Then came the 2022 crash. Musk's Twitter acquisition, macro headwinds, rate hikes. The stock fell 65% to $410. But even after the crash, Tesla remained worth more than the next 10 automakers combined. The market still priced in a future that hadn't arrived yet. Today, Tesla is no longer just a car company, it's a conglomerate. Electric vehicles, energy storage, solar panels, superchargers, full self-driving software, and potentially robotics and AI through Optimus and Dojo. The bull case. Tesla leads the EV transition, scales energy storage, achieves full autonomy, and becomes the most valuable company on Earth. Margins improve, software revenue scales, the robotaxi fleet becomes reality. The bear case. Competition intensifies, Chinese EVs undercut on price, Tesla's valuation assumes perfection, autonomy is years late, Elon Musk is distracted, traditional automakers catch up. What's clear is that Tesla changed the auto industry permanently. Every major manufacturer now has an EV roadmap. Charging infrastructure is expanding, battery costs have plummeted, the transition Tesla started is now inevitable, and the stock, still one of the most debated on Earth. Believers see it as the next Apple, critics see it as the next dot-com bubble casualty. The truth is probably somewhere in between. Tesla's journey from $17 to $1 trillion valuation isn't just a stock story, it's a case study in innovation cycles, risk tolerance, and narrative power in markets. It shows that investors don't just buy earnings, they buy vision. Tesla never had traditional metrics to justify its valuation. It had conviction, and that conviction, paired with execution at critical moments, created one of the greatest wealth transfers in modern markets. It also shows the danger of consensus. When everyone said Tesla would fail, it survived. When everyone said it would succeed, it crashed 65%. The market rewards contrarians who are right and punishes conformists who are late. For investors, the lesson is simple. Disruption is real, but timing is everything. Tesla made millionaires out of early believers and destroyed portfolios of those who bought the hype at the peak. The question now is whether Tesla is still early in its journey or whether the best returns are already behind it. Only time will tell, but one thing is certain. Tesla proved that a startup could take on the most capital-intensive industry on Earth and win, and that alone makes it one of the most important companies of our generation.